XLM holders will be rich if you're holding XLM. It's just a matter of time before you realize why this ecosystem was built differently and why it's about to explode while the rest of the market sleeps, because there's a quiet but undeniable storm brewing inside the Stellar ecosystem, and the scary part, almost no one sees it coming mainstream crypto media. They're busy chasing dopamine, meme coins, celebrity pumps, the latest ETF hype, but Stellar is playing a completely different game, and it's doing it off the radar. Why? Because what Stellar's doing isn't sexy enough for the clickbait crowd. It's not to the moon garbage or AI tokens with zero use case. This is something far more dangerous to the broken financial system. Actual infrastructure, real rails, global finance 2.0 Stellar isn't asking for attention. It's earning integration. And right now, the network just hit a new institutional inflection point that almost no retail investors have picked up on. We're talking about back-end deployment that connects Stellar to the financial plumbing of the real world. That's not happening right now. Think about it. You're not going to see CNBC run a segment on Sorbonne smart contracts powering supply chain finance in Asia. You're not going to hear TikTok influencers talk about tokenized trade finance debt. But guess who's paying attention? Institutions, banks, fintech, infrastructure providers. And they're not just interested. They're deploying from the outside. Stellar might look quiet, but that's the point. It's supposed to look boring until it's already embedded in global payments and you realize you missed the entry point, because this is what no one gets. Stellar doesn't need hype to move. It needs traction. And that traction is already underway, just not on the charts yet. These aren't vaporware announcements. These are live rails confirmed. Launched integrated Pelago labs already financing trade flows on Stellar MoneyGram, already running stable coin ramps. Yon Fund already backing real-world use cases, not with promises but with capital. You don't need a roadmap when the road is already being paved under your feet. The problem is, by the time retail notices, by the time it trends on Twitter or hits a Forbes headline, it's already priced in whales. Don't ring bells, they build foundations. And Stellar's foundation is not just solid, it's actively expanding. So if you're holding XLM and wondering why nothing's happening yet, you're asking the wrong question, because something is happening, but it's not a breakout pump. It's a strategic takeover of real-world financial systems with Stellar as the backbone. And when that gets priced in, you'll either be ahead of it or watching it from the sidelines. Why smart money is quietly accumulating. Let's make something brutally clear. XLM's price doesn't move like meme coins or hype-driven garbage. And that's not a flaw. That's by design. This isn't a token built to pump off tweets or get hijacked by retail. FOMO XLM is utility infrastructure. And the people who actually understand that, they're not screaming on social media. They're accumulating in silence. Smart money doesn't chase green candles. They build positions before the breakout. They don't care about narratives. They care about rails, real use cases, and asymmetric opportunity. And guess what? That's exactly what's happening on chain right now, but no one's paying attention. Let's zoom in on chain. Metrics are quietly surging. We're seeing a sharp uptick in new wallets, consistent inflows, not panic dumps, wallets that don't sell, wallets that acquire, hold, and wait. That's not retail noise. That's smart capital setting traps, and it's not some Twitter influencer with a referral link. It's wallets that have done this before during Ethereum's early days, Solana's early breakout, and now they're here positioning themselves under the radar in Stellar. Why? Because Stellar's architecture isn't just efficient, it's enterprise ready. We're talking sub-cent gas fees and instant finality. No gas wars, no front running, no broken fee models like Ethereum. And that's exactly why real businesses are choosing Stellar over other chains. This isn't about NFT floor price gambling. This is about actual capital flows moving through real financial infrastructure. Just look at Pelago Labs, backed by the Stellar Development Foundation. They're not playing DeFi, dress up with cartoon tokens. They're building next-gen decentralized finance for real-world trade. Finance, we're talking tokenized receivables, supply chain, financing, and programmable settlement tools. Already live, already functional. This is not theoretical. This is trillion-dollar global infrastructure being rebuilt in real time. and XLM is the native asset wiring the rails. It's like watching Stripe, Swift, and Circle converge, except it's happening on-chain and it's powered by Stellar. Meanwhile, retail's still chasing the next meme, still waiting for a green candle before they believe, but the smart money, they don't need hype to see the play. They need conviction, and right now that conviction is flowing into XLM on-chain, off-radar, and without hesitation. So if you're wondering why Stellar's price isn't pumping like some random low-flat meme token, good, that means you're early. Because when the chart catches up with the fundamentals, it won't give you a warning. It'll just leave you behind. The 10 trillion real-world shift nobody's talking about. Here's what should have every XLM holder glued to the screen and not blinking. For the next 60 seconds, the world of crypto loves to scream about trillion-dollar opportunities. But here's one that's not just real, it's already happening. And almost no one's talking about it. Let's talk about the global trade finance gap right now, the black hole where trillions vanish, unbanked businesses, denied loans, and inefficient cross-border capital flow just hit 2.5 trillion, and it's growing now. Zoom out the total market for tokenized real-world assets. RWAs is projected to hit 10 trillion by 2030. You read that, right? 10 trillion, not in TVL, not in meme coins, in actual business capital that runs the world. So here's the part no one's ready for while everyone's distracted by layer 2's ETF hype and whatever. Meme coin just 10x Stellar is building the rails that will move this capital. Let's be clear, it's not Ethereum, gas fees, kill business logic. It's not Solana, too fast, too fragile, too centralized. It is definitely not Bitcoin the Stellar. And no, this isn't some white paper dream or long-term bet. This isn't someday, it's already happening behind the scenes. Real companies, not crypto startups, but actual businesses are onboarding onto Stellar. They're using Sorbonne Stellar's smart contract platform to build programmable trade finance solutions that can handle invoice tokenization, automated settlement supply chain, payments, cross-border, cash flow, all on-chain. It's fast, scalable, it's permissionless. And most importantly, it's compliance ready. The key that opens the door to institutions, think about what that means. The same rails that let someone in Ghana receive USDC via MoneyGram are now being repurposed to let corporations tokenize invoices, automate supplier payments, and bridge capital gaps with a few lines of Sorbonne code. This is real-world DeFi. This is tokenized trade finance. This is Stellar flipping the script on how global capital moves, and yet the retail crowd, they're still glued to. TradingView still asking why XLM hasn't mooned, still sleeping. But here's the reality. Stellar doesn't need hype, is playing a different game, the infrastructure game, and when that 10 trillion wave starts flowing through compliant on-chain rails, the native asset, the one greasing the system, XLM, that's not math. And if you understand even 10% of what's happening right now, you'll realize it's not that Stellar isn't moving, it's that it's already in motion under the surface. By the time it explodes on-chain, it'll be too late to catch Sora Eon. And the DeFi domino, Sorbonne, is the key no one's talking about. And that's by design while everyone's distracted chasing yield on improving chains or minting the next meme token. Stellar has quietly dropped a compliance-first smart contract engine built for the institutions that actually move the world's capital. This isn't some tacked-on feature Sorbonne. It's Stellar's answer to Ethereum's smart contracts, minus the gas wars, minus the latency, and minus the regulatory headaches. It's faster, it's leaner, it's developer-friendly. And it's built from the ground up for businesses that need to move real value at scale, not just test in a sandbox. Already, Sorbonne is powering real-world experiments, not on test nets, not in theory, but with actual enterprise use cases, trade, finance, automated payments, tokenized invoices. These aren't hypothetical anymore. They're happening. And then there's Eon. While retail waits for hype cycles, Eon is deploying capital into infrastructure. This is Stellar's $100 million enterprise fund, and they're not wasting a dime. They're pumping millions into startups that are doing one thing, bringing real-world cash flows onto the Stellar chain. These are projects that don't just talk adoption. They're signing contracts, integrating with existing supply chains, embedding DeFi logic into TradFi processes, and onboarding enterprise clients onto on-chain rails. Now ask yourself what happens when you combine ultra low-cost compliance, ready smart contracts, With enterprise-grade apps that already have paying customers, you get a domino effect. One successful pilot leads to another one, working use case, convinces an entire sector. One integration lowers the barrier for the next dozen. And suddenly, the wall between tradie and DeFi doesn't just crack, collapses. This is where Stellar is positioning itself not as another DeFi playground, but as the bridge, the middleware layer between regulated financial systems and open programmable digital assets. Ethereum is chasing ETFs. Solana is chasing speculators. Stellar is chasing infrastructure. And while that doesn't make headlines today, it's what will quietly rewrite the financial plumbing of tomorrow. Because here's the thing, no one's prepared for when the dominoes start falling in enterprise finance. They fall fast. And when they do, there's no time to FOMO, and the rails will already be laid, the platforms will already be built, and the tokens, they'll already be gone, locked, staked, or bought up by the very institutions everyone thought would never touch crypto. That's why Sorobon matters. That's why Eon matters, because this isn't just about building tech, it's about building momentum. And Stellar has already started the chain reaction. The price trigger, they're not telling you. Let's talk price. And more importantly, let's talk about why XLM hasn't exploded yet. Because if you're judging Stellar's value by looking at price charts, you're already missing the point. This isn't a hype token. It's not built to moon off of memes or celebrity tweets. This ecosystem was built for one thing. Adoption, and adoption takes time until it doesn't. Here's what 99% of retail investors completely overlook. In 2019, Stellar permanently burned 50% of its total token. Supply gone, wiped from existence. Not locked, not staked, burned. And since that day, not a single new token has been printed. No inflation, no shadow unlock schedules, no surprise developer emissions. The tokenomics are set, and they're deflationary by design. That means this is no longer a token with theoretical scarcity. It's mathematically scarce. And every transaction, every use case, every onboarding partner only tightens the squeeze. Now combine that with what's happening under the radar. Enterprise-grade platforms like Palal Labs are building on Stellar. Centralized liquidity is drying up. Exchanges are seeing declining sell-side depth. On XLM, trading pairs and institutional-grade wallets are quietly accumulating, not flipping. When you have a cap in rising real-world utility, you get one of the most powerful forces in finance, a supply shock. And here's where it gets serious. It doesn't take a billion-dollar institution to trigger it. A single $100 million buy order routed through thin liquidity across multiple exchanges could blow the lid off this entire thing. Why? Because the float, the actual liquid supply of XLM on exchanges, is shrinking fast between long-term cold storage, staking, institutional custody, and ecosystem lockups. Most XLM is already spoken for, and the moment serious capital starts flowing in, not speculative hype, but enterprise-driven allocation, there won't be enough tokens left at current prices to absorb that demand without massive upward pressure. This isn't emotional speculation, this is mathematical pressure. Scarcity plus adoption equals a squeeze, and that squeeze becomes explosive when demand isn't retail chasing green candles, it's regulated institutions building products on-chain, integrating Stellar into the real economy, and locking up supply for the long haul. So why hasn't the price moved yet? Because the smart money doesn't want it to, not until they're done positioning, not until they've accumulated everything they can, quietly, slowly, methodically. But when that accumulation phase ends, it ends fast, because price doesn't move until it does, and when it does, most people will be too late. That's the trigger they're not telling you about, and it's already being set. The market's perception of XLM. Why? The underdog status might be an advantage. The crypto market is a fickle one, often rewarding hype and noise over true utility and long-term fundamentals. With this in mind, Stellar XLM has remained an underdog in the eyes of many investors and market participants, despite its consistent evolution and growth. This section will delve into why XLM's status as a quieter player in the crypto space might actually be one of its biggest advantages, the power of underestimated assets historically. The crypto market has shown a tendency to gravitate toward assets that generate the most buzz, often ignoring projects that take a more measured, steady approach to development. Think of Bitcoin during its early days, seen as a novelty. Dismissed by many until it became undeniable, XLM has followed a similar trajectory. The market's tendency to overlook it means that institutional players and savvy investors have had the opportunity to quietly accumulate and position themselves ahead of the curve by not being at the center of constant media attention or market speculation. Stellar has been able to build strong real-world use cases without being influenced by the short-term volatility and hype-driven noise that so often affects the likes of Ethereum, Bitcoin, and other more high-profile cryptos. In the world of investment, there's a certain kind of strategy that relies on understanding that a low profile is often an advantage. This has allowed XLM to remain under the radar while quietly making moves in the background, institutional trust and stability over hype, as we've seen. With Ripple and XRP, institutional investors and traditional financial firms have not been drawn to volatile, hype-driven projects. They've been looking for stability, utility, and real-world applicability. Stellar's low-key, consistent progress positions it as a trusted partner for those looking to integrate blockchain technology into real-world financial systems. The Stellar Development Foundation, SDF, has prioritized long-term partnerships and use cases focusing on collaborations with banks, fintech companies, and remittance services. This strategy contrasts sharply with the pump and dump mentality often seen with projects that have a more speculative following. Institutional players understand the value of blockchain as a backbone for remittances, cross-border payments, and decentralized finance DeFi without the need for constant hype-driven market movements. The calm before the storm, XLM's accumulation phase. Right now, the market is still focused on the hyped assets tokens with massive marketing pushes, community-driven memes, and quick price action. But for those who are paying attention, XLM is in what we can call an accumulation phase, much like an investor who buys stocks in a company before it starts to receive widespread attention. Savvy crypto investors are taking positions in XLM before the rest of the market realizes its potential. This phase is characterized by steady development, growing partnerships, and adoption, all of which serve as building blocks for future explosive growth. The real kicker here is that once the broader market begins to see the full scale of what Stellar has been quietly building, the price action may not just be a spike, it could be a long-term rally sustained by institutional support, real-world adoption, and the unmatched utility of the Stellar network. Why this underdog status might actually be the key to XLM's success. Unlike the flashier projects that are often subjected to the whims of social media and retail traders, Stellar's calm, methodical approach could ultimately be its strongest asset. This is because its growth has been based on real utility and not just hype. While others have relied on media-driven speculation to pump their prices, Stellar's price movement has remained more organic, linked to actual progress in the traditional finance sector. As more institutions and enterprise look to incorporate blockchain technology into their operations, Stellar's quiet progress and robust technology will come to the forefront. This slower, less dramatic rise may prove to be a sustainable model, as opposed to the boom and bust cycles seen in other parts of the crypto ecosystem. When the world realizes that Stellar has been building quietly but steadily in the background, the market's reaction could be seismic. You've been warned. Every single XLM holder needs to understand one thing. This isn't just about price, it's about positioning before the financial system finishes. Rewiring itself, because if you're holding Stellar right now, you're not betting on hype, you're not chasing narratives, you're front-running the infrastructure shift of the decade. We're talking about a blockchain that is compliant by design, scalable without congestion, built for institutional rails, and already integrated into real-world finance. This is not the next meme coin cycle. This is programmable money at the enterprise level, quietly replacing outdated financial plumbing, while everyone else argues about dog coins and ETFs. Here's what most people miss. When blockchains start being used by governments, banks, fintechs, and trade networks, it's not about virality, it's about visibility. And Stellar has intentionally stayed out of the hype because real infrastructure doesn't scream for attention, quietly wins deals. So here's the bottom line. If you're waiting for a big news moment to tell you when to buy in, you're already too late, because that moment won't be a headline. It'll be an irreversible phase shift. When institutions flip the switch and the demand curve goes vertical, by then the price won't be quiet anymore. The question is, will you already be in position, or will you be watching it happen from the sidelines, wondering why no one told you sooner? Because this isn't speculation anymore, it's happening, and if you've been paying attention, you know exactly what that means. So don't sleep on this. Don't wait for CNBC to mention Stellar. By the time they do, the move will be over. And if this video disappears from your feed, you'll know why. Subscribe to be crypto smart right now, because we don't follow the trends. We expose them before they explode. This was your warning, you've been told.